Let's do this. So welcome to the Buying a Home in Rotterdam webinar. My name is Kimo. I am the founder of Expat Housing Network, and I'm half Dutch, half Caribbean, so I know what it's like to move to a new country. I'm a proud father of a daughter who is 4 years old, actually 5. She turned 5 yesterday, but she thinks she's 16, so that's always good fun. I bought my own home about 5 years ago. We weren't supporting anyone with finding a home to buy. We were only supporting people with finding homes to rent. Had I known then what I know now, things would look a little bit different. So it took me 7 offers before I got my final offer accepted. Again, would I have known then what I know now, then things would look a little bit different. So I'm here to actually share some of the experience and, of course, a lot of the knowledge that we've gotten up in the last couple of years. We've helped numerous people buy a home. I think the other week we helped 9 people, and we're just doing a great job when it comes to that. So today we're going to talk a little bit more about, of course, EHN as a proper introduction, talk about the mind state of starting and getting into the housing market, savings, of course, what would you need to actually start the process, and 3 tips to win in the market. And I'll share a little bit more about the timeline. But I believe greatness is achieved in the agency of others. So if you do continue to work with us, then you'll probably work with one of my lovely colleagues. I'm just giving the webinars. I've been demoted to webinar giver, and these guys now have much more experience with actually securing properties for the likes of you than more than I have. EHN, we're not traditional real estate agents. The majority of us don't have a background in real estate. We have background in liberal arts, psychology, name it, and we focus on the experience, your experience. Of course, we have to make sure that you actually can secure a home through us, but we also make sure that that experience is a pleasant one. We only help with buying or finding a home to rent. In this case, it's buying. We don't do selling or letting. Why is that important? Because right now it's a seller's market. So if I would have a selling client and a buying client, I would most likely naturally gravitate towards the selling client because it's much easier. Buying, however, is a bit of a puzzle, and I think we've gone quite well at it. We also charge a fixed fee, no commission. So why would you pay more if you're already paying more for the property? Fixed fees, so all transparent there. And we know what it's like to settle into a new country. Maybe you quickly saw the majority of us have actually lived abroad or are from abroad, so we know what it's like to move to a new home. Last slide about EHN, and then I'll stop talking about us. What do we add in value? Selling agents take our offers more seriously. Why? Because they know that we've done due diligence. It happens very often that people submit an offer without an agent and then pull out a week later. They don't want that because it makes the process less reliable for them and their clients. Also, we can sometimes book in viewings when it's no longer possible. We support by reviewing Dutch and legal property documents, and we help define the market value, which is very, very important. We'll also inform you, of course, by the rules and regulations, and we'll make sure that you don't make the same mistakes that I made when I bought my own home. By the way, if you have any questions, pop them in the chat. I have the chat box open. I can't see the Q&A, so just pop them in the chat, and then I will be able to answer. First question to you actually is, where in the process are you? Are you in the orientation stage? Have you started searching, viewing already, or maybe you've submitted an offer, or have you got an offer accepted? I'd love to learn that from you. So just pop it in the chat, and then I know where you guys are. I'll continue, so no worries. If not, I'll talk a little bit more about the mind state. First, of course, the majority of you have read the news that the market is going up, up, up. There's a lot of competition and so on. Just let me share some information about the last quarter and currently. So currently there's about 1,741 properties for sale in the Rotterdam area, and the average housing price is 375K, which is up 20% from last year. Days to sale, this is important because it means that the market moves very, very quickly. It's 15. So from the moment it's published online to the moment it's actually sold, 15 days. That means that you might likely be able to view the property once. With a little bit of luck, you'll be able to view it twice, but you'll make the decision based off that. Also, if we look at the property values, then we're seeing the property values go up since 2014. Before that, we still experienced a dip from the GFC, but it's been going up since. And I think that if you add the numbers for 2021, 22 in there, you'll see an even steeper increase. So we often get the question, is it a good time to buy? I'd say look at the reasons why prices are going up, and will that change anytime soon? Fiscal benefits is the most important one. Tax exemption, I'm going to describe 2 groups for you. One group is either 34 years or younger and is buying a property up to 400,000 euros. And the other group is 35 years or older, or buying a property of more than 400,000 euros. That first group doesn't have to pay transfer tax. Transfer tax is 2% of the purchase price, so that's a decent amount. The other group has to pay it. What we've seen since the introduction of the tax exemption is that money that was originally being meant for transfer tax is being put back into property offers. So that drives the price up. Also, interest rebate is very interesting. You can deduct your mortgage rate or mortgage interest off your taxable income at the end of the year. Why is that interesting? Because you'll pay less on a monthly basis. So it drives a lot of people to the buying market, which means that the price will be driven up. There's no capital gain. So if you make a profit on your property, when you sell it, you don't have to pay taxes over it. Again, that money is being put back into the market. Also, tax-free parent donations. So parents are allowed to donate up to 100K to their kids tax-free if they use it for properties. So again, old money streams back to the new generation into the housing market. Combine that with low interest rates, more people are considering buying a home versus renting because interest rates are low. High rents is also one factor. And then we have an increasing demand, and then we have a kind of like slowly increasing supply. So that creates a discrepancy, which means that prices will go up. Is this going to change anytime soon? No, it's not. The fiscal benefits are, well, technically a result of the policy of the government. And we currently have a liberal government with a very much homeowner, home buyer constituency. So what they do is they don't kind of like touch any of this. Interest rates, I don't expect them to go up anytime soon either. There's a lot of money flooding the market, still necessary, I think, but it drives the prices of the interest down. Also, high rents, especially now, we're seeing that a lot of backfilling is happening due to COVID, so that will increase as well. Lack of supply, we are known for our consistency in not making the quota when it comes to building enough properties. Of course, there's plenty of other things that we can do, but I think that if they wanted to create a more stable housing market when it comes to buying, or not necessarily stable, but a less increasing housing value market, then they would have to touch the first couple of matters, the policy for fiscal benefits. So, but they're not going to change that. So I expect the prices for at least the next year, 2 years, to continue to go up. Next year, most likely double digits. Who knows what the year after will bring? So, is it a good time to buy? It depends. Look at these things. Will the price go up? But also look at, will your quality of life increase, right? Very, very important. If you're currently renting a place for a decent amount, it's spacious, and you really enjoy it, then consider what you can actually buy for the money that you can borrow from the bank. If you can buy something that will increase the level of quality of your life, then go for it. If you feel that you want to maybe build up equity and save some more, go for it. But always look at your current state and what you'll actually be getting when you buy a property. Then, once you've made that decision, what would you need in savings before you start? These are the things you need in savings. 3 columns. One is the type. The second is the actual amount that you'd have to spend. And the third one, is it tax deductible? All of the yeses there in the third column are linked to the mortgage. Why? The government's made it more attractive for you to get advice and specialists on board when it comes to the mortgage. It's a difficult product. So they said, let's make sure that they can actually get some money back on the cost that they spend on mortgage advice. So the mortgage amounts, or the amounts that are linked to the mortgage, are tax deductible. So the notary is tax deductible when it comes to the mortgage deed. The bank or the mortgage broker is also tax deductible. An appraiser is also tax deductible. If you go for the national mortgage guarantee, it's also tax deductible. The other ones are not, unfortunately. We're still lobbying for our service also to be tax deductible, but I don't think we'll get any further anytime soon. However, what I just painted was two groups: one 34 years or younger, buying up to 400K; the other one 35 and older, or buying above 400K. This group has to pay approximately 3% in total for purchase fees. This group will pay 5% because the difference is transfer tax. So that is what you would need in savings. Let's use an example. If you're looking to buy a property for about 400,000 euros, then the first group has to have 12K, the other group has to have 20. Okay, yeah, that's right. That's right. Sorry, it's still early. So have a look at these things and make sure you have this money when you start the process. It doesn't require you to actually make those payments directly already. Most likely some of these payments will be once you actually get the keys to the property, or before that, the day before that has to be in the account. But just make sure that you understand that you have costs on top of the purchase price. By the way, any questions, just pop them in the chat. I'll talk about a few tips to win in the current market. Value, value, value is very, very, very important. Let's look at this property. It's on the market for 395K. Um, we often get the question, how much should I overbid over the asking price? Then I tell them, stop it right there. Don't look at the asking price when you talk about your offers. The asking price is more to give you an idea of what you can be looking for on Funda when it comes to your budget in relation to the actual asking price. But the asking price is a very subjective thing. Real estate agents are allowed to put the asking price as close to the actual value as possible. So let's say this agent puts the property up for 395. The market value, however, is 415. What is the market value? The market value is the value of the property in comparison to properties sold that are similar in the last 6 to 12 months. So let's say we find 3 properties that are sold in that same neighborhood that are kind of like same size, same quality, and so on in the last 6 to 12 months. Then we can use those as a reference to define the market value. The market value is important because the bank will only give you this much money. Of course, if you want to do renovations and your salary permits more lending, then they would be able to offer you a little bit more. But in general, they give you no more than 100% of the actual market value. So why is this important? Because if you base your offer on the asking price and you forget the market value, then it might mean that if you go nuts, that the market value is not enough to actually get your mortgage. And then, yeah, you're not going to be able to move forward with the deal. So asking price 395, market value is 415. Somebody buys this property for 435. Great, they have some savings apparently. That's good. So the difference between asking price and purchase price is 40K. It's about 10%. Difference between market value and purchase price is about 20K. Now, the question I asked at the beginning of this slide was, a lot of people say, how much should I ask or bid over asking price? Don't look at that, because let's use a second agent with the exact same property. He puts the property up for 375. He's maybe a little more opportunistic, believes that more people in the property will drive the prices up. The market value doesn't change though. And let's say somebody still purchased this property for 435. Then the difference between asking price and purchase price is suddenly 16%. The difference between market value and purchase price is, however, not any different. If, however, everyone starts using this narrative, 16% over, 20% over, 15% over, then if you use the property value or the property asking price of that first agent, then suddenly people would be offering for 50, for 60 for the property. So let's use the narrative market value versus purchase price, not asking price versus purchase price. So value, value, value is very important. I got a question from JM. When do we get to find what is the market value? So like I mentioned, you compare properties that are sold in the last 6 to 12 months that are similar. Let me write some platforms where you can actually find more information about the property values, or technically the values of comparable properties. It's still a puzzle, and the more accurate you are, the better you are at it. Of course, we're happy to help out with that. We have tons of experience and we've been spot on the majority of the properties. So if you have any questions about that, we're happy to support that. Okay, so second is a winning offer. By the way, before I move forward, a question from David. Is it usual to have those differences in purchase price and market value? Would it be possible to buy something really close to market value? It depends a little bit on where you buy, David. So in some areas, the difference between asking price and market value is not that big. So most likely you'll get an offer in that is close to the market value as, for example, properties that are valued in a different way or asked with asking price in a different kind of like range. In some cases, the market is very popular. For example, in Amsterdam, we see that people are offering easily 10% over the market value of the property if it's a very popular property. So I would look maybe in areas that are less popular, that are still nice, that are still kind of like, or maybe up and coming. So I would do that. So what is a winning offer? A winning offer is a good price, but it's not always the highest price. If we look at this view again, let's say you have 20K in savings. You know what the asking price is. You don't really know what the market value is, but let's say you offer 450 on this property. Turns out that the market value is 415. You only have 20K in savings, so technically you should only be able to buy it for 435. If the selling agent finds out that you don't have enough money to actually make up for the difference, he's not going to move forward with it. So offer a good price that is realistic based on what you can spend and borrow, not always the highest price. I think that the other clauses or the other criteria of your offer also are important. The second one is security to the seller. So the seller will want to know that you're going to be able to move forward. So share a little bit more about your financial condition or status. Make sure that they understand that you've done your due diligence, and also don't add tons of clauses in that give you the option to pull out when, for example, something doesn't happen. Let's say if you put a finance clause in, which gives you the right to pull out if you don't get a mortgage. Compared to an offer that doesn't have it in, you'll have the weaker offer. By the way, I must say, if you take out the finance clause, don't do it without consent from your mortgage advisor and your agent, because there is a risk there. But making the offer more attractive means less criteria and clauses in that sense. A good price, realistic price, and a minimum amount of criteria. But again, do it with the right kind of support, because if you just offer crazy amounts without subject to financing and you forget the important steps, then you might be locked into a deal that you don't want or cannot even pay for. Then offer the least amount of hassle as well. Very important. Let's say the seller will want to move out the 1st of February, but you really want to move in the 1st of January. Don't ask him to move out the 1st of January. He has to then move out, store his stuff, find temporary accommodation, and then move into his new home the 1st of Feb. So make sure you understand what the seller is looking for in terms of transfer date, in terms of what kind of tenant he also, or what kind of land owner or buyer he wants as well, and just figure out what their status is. Let's say they are going through divorce. God forbid, but then money's maybe a little bit more important, or the speed in which we can wrap these things up, right? So understand what the seller is looking for. Then offer personal touch. So we often are competing with investors that want to rent out the property. If you share a little bit more about yourself, why you love the property, most likely, if you buy from someone who's lived in the property, who's built kind of like an emotional connection with the property, then your offer is going to be picked over an investor. So share a photo, share some text, and why you love the property. Then the third one is due diligence. Make sure you plan your due diligence well. What are we talking about? The technical inspector. She comes in to inspect the property and understand if it's in a good condition, if you need to renovate anything. Then we also have the appraiser. The appraiser comes in to define the actual market value. Why? Because the banks don't work with parties that represent either the buyer or the seller, because we're biased, right? So what is important for them is that there's an independent party. Technically, it's not 100% independent because you will pay for the appraiser, but the appraiser has to run his report by the independent institute that checks if he plays by the rules. He'll come in, take some photos, do the majority of his work behind his desk, and then move on. My question to you guys is, when do you book them in? Will you book them in before or after your offer is accepted? I'm very curious to hear that. Do you book in the appraiser and the technical inspector before or after your offer is accepted? What do you reckon? Jam says after. Anyone else? Saya says before. 50-50. I'll go with a third one. Anyone? There's always a good part, the interaction part. See if you've been sleeping on me. Hey, Ravinder says before. I'm going to break it down to you. You actually booked them in after your offer is accepted. It was a bit of a trick question. Why? Because some people think that they're actually committed to a deal once their offer is accepted. That's not the case. Let me paint it for you. So, by the way, getting a technical inspector and an appraiser in costs money, right? It's about $1,000 together. If you get them in before your offer is accepted and your offer is not accepted, then you've lost that money. If you get them in after your offer is accepted, at least you'll know that you're going to be able to move forward with it. Why do we get them in after your offer is accepted? Because you'll want to have that information from them before you actually commit yourself. When are you committed to the deal? Not when you sign the purchase contract. You still have 3 days after you sign the purchase contract to reconsider. Let me share this timeline, by the way. Once you get your offer accepted, it takes about a week to a week and a half to get your purchase contract signed. Then once you've signed, you have 3 days to pull out without giving any reason. So let's say you wake up in the morning sweating and thinking, oh my God, what did I do? Then you can pull out. You just have to inform the notary, the selling party, and just say, sorry, guys, this is not for me. I'm not going to move forward with it. I hope you'll find a great new buyer. Most likely they will easily as well. So don't worry too much about that. But once you get your offer accepted, make sure you get these guys in, because a technical inspector will tell you more about the quality of the property. And if there's anything that they uncover that requires direct attention that you weren't aware of, maybe you can use that information to negotiate a little bit more. The appraiser will give you the value, which is important because the bank will give you that amount of money. If it turns out that the value is much lower than you anticipated, that means you have to put up more cash yourself. And then that is not always ideal. If it's higher or if it's equal to what you anticipated, that's great. But you want to get that information in, preferably before you sign the bridge contract. Why? Because afterwards it becomes a little bit more tricky to negotiate. You can still do it, but you only have those 3 days to do it. And so make sure you get the reports in before you sign a bridge contract. So get these guys in ASAP after you get your offer accepted. We're going to share a little bit more about the timeline. So let's start the search. This, of course, is a bit skewed. It might take you a little bit longer to get your offer accepted or to find the ideal property. Let's say this is a couple of weeks, months. Then you get the technical inspector and appraiser in. You sign the bridge contract. Then you start a mortgage application. Well, technically, you can start before. So make sure you talk to a mortgage advisor or your bank beforehand and get some information. Make sure you understand what documents you have to upload and share with them, so you can do all of that prior to your offer being accepted. But the official mortgage application starts once the purchase contract is signed. Why? Because the bank will require all of that information before they finalize the application. Then you have 3 days between purchase contract signing and your cool-off period expiring. Then it takes a couple of weeks to get your mortgage done. Once you get your mortgage approved, hooray, hooray. Then about 7 days before you get the keys to your new home, you'll get the statement of completion. This is a final invoice of the purchase price plus the purchase fees, which we referred to earlier. If you are 34 years or younger, buying up to 400K, it's 3%. The other group pays 5%. So the purchase price plus 3 or 5%, and then deduct the mortgage that you got from the bank off it. And then you'll have a remainder of amount that still needs to be transferred to the notary. That happens 7 days before. The money has to be in the account of the notary about a day before you move. And then you'll have the final date. You'll get the keys, but not before you go to the property, and make sure the property is in a good condition. Once you've seen that, you'll go to the notary, you'll sign all the documents, and then you'll get the keys. You'll be a proud owner of a home and a proud owner of a big, big, big debt. Either way, you'll most likely have a great time moving forward. Then let's say something were to happen with that property, or you find out that something's not working that should be working. You have a period of time to inform the selling party about this. Don't wait too long, because you do have proof of, I would say that proof that you have to show proof that it wasn't working when you moved in. So if you wait 2 months with actually sharing, okay, hey, this power socket's not working, can you please fix it? Then it's going to be too late, because the seller will most likely say, no, it was working when I moved out, so bad luck there. So don't wait too long with actually testing out the property. Make sure that you do that ASAP and inform the seller about it. Um, I really, really sailed through that presentation. So just to give you kind of like a short summary, make sure you understand what the market conditions are, get into the right state of mind, then also focus on value, value, value. Make sure you do your due diligence in time. And what was the third one again? Uh, submit a winning offer. What's a winning offer? Not always the highest price, but offer a good price. Make sure you don't offer a lot of hassle. Give security to the seller, because they don't want to kind of like start over the process again a month or 2 months after because you're pulling out. And then, of course, share a little bit more about yourself. Any questions so far? Actually, so far, by the way, this is the end of the presentation. Any questions from you guys? I will definitely share the presentation, Ravinder. How many days buffer person gets between offer accepted and purchase contract signed? It's about a week, week and a half. Some agents will try and push you to sign ASAP, but most likely it's a week, week and a half. JM asks, in other countries, you get pre-approved by the bank before you make an offer. In NL, how do you offer to seller reassurance that your financing is safe? Yeah, good question. So, for example, in the UK, you get pre-approval, right? In NL, you do not. So I would advise you to talk to a mortgage advisor, because they'll help you understand if you're going to be able to get a mortgage or not. What is important is that you understand, compared to what you're earning, what can you borrow, right? Then you have to understand the market value of a property, and those two things combined will give the seller some reinsurance that you're going to move forward and you're going to be able to actually purchase that property. And that's why I say give them some more information about your financial condition. So maybe share how much you're making, or that you can easily borrow, or that you've been in advanced talks with a mortgage advisor. Um, we are not in a situation yet where banks give you pre-approval. I don't know why. I think it's ridiculous, but yeah, that's good to know. A question from Flavi. Who do you have to apply for mortgage after offer is accepted? I thought it was before. So you actually chat with the mortgage advisor or your bank before. Make sure you prep everything, and then the mortgage advisor or the bank will actually finalize your application once the purchase contract is signed. Um, why is that? Well, the bank wants to have proof that you actually purchased the property, and then you'll most likely you get the appraiser in after you got your offer accepted. So those two things are very important for the bank to actually give you the mortgage. I hope that answers your question a little bit. R. Lopez Garcia. Is there any other way to get the money other than the personal savings into an NL account, EA, informal family loan, or fast credit? You'd still have to move it to an NL account, I think. You can also pay it, I think, from a foreign account, but then the checks and balances come in place. So they'll actually do a little bit more due diligence on where the money comes from. You have to prove how'd you get that money, and that's that. So it is possible. Sergi asks, are there any renting price limitations? I mean, if you buy a house and after some time you don't live there anymore and you decide to keep the property rented out, is there any regulation that tops the rent you can get? Um, no, not yet. So it depends what kind of house you get. Like, what is important is that we work with a point system in the Netherlands. So if your house has accrued a certain number of points, which is linked to the size, WZ value, luxury, then most likely you'll have a property that's in the free market. Then you can decide whatever you want when it comes to rent. If, however, those regulations will change in the near future, maybe in the next year or two, then the WOZ value, which is the value given to the property by the municipality for tax purposes, they say, okay, hey, we're going to only calculate 1/3 of that value into the point system. Then please be mindful of that. So do your research before you actually buy a property when it comes to that. Also, don't forget, Sergi, that you need permission from your bank to rent it out. The banks own technically the property until you've paid off your last penny, or at least they have specific rights. So if you rent it out, make sure you either check with your bank if you can, or if you don't, well, there's a risk involved there. JM, good question. What would you say is the main difference that working with EHN makes? Besides, of course, having a lovely company, we are pretty good at what we do when it comes to actually securing a home. So we've built up a big network. We are just focusing on this stuff, right? So we've come really, really good at defining the market value. I think I'd say almost 96 or 97% of the times, the value that we've given or the value range is spot on with the actual market value. Sometimes we value it actually a little bit lower and the market value is higher. And I think it happens almost never. I think it happened once in the last 4 months where we valued it a little bit lower or a little bit higher than the market value, but I think it was off by 4K or something like that. So I think that's the added value. Agents trust us and clients like us. Again, we also understand what it's like to go through a process like this as a foreigner. So we have tailor-made the process in such a way that it actually supports you throughout the process and you don't have to ask any other questions. By the way, I think it's also just nice to not have a slick real estate agent with a suit to join you on viewings or to support you in the process. VY asks, what are the conditions to have the mortgage? Unlimited labor contract? No, so you don't need a unlimited or indefinite contract. What you need is a contract, that's important, or if you can prove income of the last 12 to 36 months as a freelancer or a self-employed, then that could also work. But you need, if you have a contract, you need an employer statement. What is that? It's a document from HR stating that they'll keep you on if, for example, the company allows it and if you do a good job. The banks need that. I think it's a hollow piece of paper because it doesn't bind the company to anything, but it's maybe an extra set of proof that HR check that you actually still work there. Flavi, where would you recommend to look apart from fun and areas? For example, if you see an abandoned building somewhere and you want to find out if you can buy it. So abandoned buildings is a tricky one. I would first look it up on Google. There's other few platforms that you can look for properties as well. Jaap.nl, VBO.nl, but when it comes to abandoned properties, there's no specific platform where you can look those up. So I would look up the address and see if it's for sale. If you can't find that, sometimes you can still find the owner's details in the cadastre.nl. So maybe you'd actually be able to reach out directly. JM, can you explain your fees? Yes, I can. I don't have a sheet for that. So what I'm going to do is, I'm not sure if you can actually see my whole screen. I'm just going to go to the website. So we offer, can you see my screen? I think you can. So we offer two types of packages. One is the smart package and one is the complete package. The smart package is a package where we don't join your own viewings or the transfer or anything like that. We come into gear or kick into gear once you have found a property you like, then we'll do the research, we'll submit the offer, we'll review the documents, make sure you understand what you're signing for, book in the third parties, the appraiser, the notary, the technical inspector, and make sure you're ready for transfer. That's a smart one. It's probably the most popular one because, yeah, we can support with that all over the Netherlands. The complete one, however, is something where we actually join you in viewing. So we attend the viewings with you. We schedule the viewings as well. So just send us some links that you've seen to Funda, and then we can actually join you and schedule it as well. We'll also join the third party. So the technical inspector and the notary, and of course at the final stage we'll attend the inspection. That is a more hand-holding package. I think it's also quite nice because we're able to see things that you might not pick up on when you see the property. But yeah, these are the two packages that we offer. The fees that you see there below, so for Smart 25, for Complete 4K, they're no hidden fees, no hidden taxes there. That's what you pay. So what you see is what you get and what you pay. So the asterisk on the 29.9 euro figure, I think it's 24.99. So if we support with buying a new build home, that's what the asterisk is for. We add a fee on top of that because a new build home requires a lot more documents to inspect, review, and a lot more hand holding. So if you want to buy a new build home, then we charge a little bit more. Question from David. Is it true that a finance mortgage advisor would find better mortgage rates than going to my own bank? Yeah, it's a good question. Why? What do we often say? A bank is kind of like an old-fashioned retail shop. They'll have a couple of products. They'll try to sell them to you. The mortgage advisor has a range of about 30 to 40 different products, and they will actually advise you. They're more kind of like your personal shopper stylist. They don't care where you buy, as long as you know what you're buying, you're happy with it, and you look good in it. So yes, I would advise talking to both. Um, it's a big investment. Do your due diligence, right? Don't just go with the very first simple and the best. Just go and have a chat with multiple and figure out what works for you. Is there too much difference between these web page calculators about how much money you can mortgage? There is a bit of a difference. They use a very general, I think, a rule of thumb: 5 times your annual gross income, including holiday pay, not including bonuses or anything else. And then for your partner, you can use the same setup, but then only calculate 90% of their income. Again, I would talk to a mortgage advisor before you start to search. Have a chat with them. Most likely, you'll be able to do digitally, and then just give some information. They'll be able to do a better calculation on that. So there might be difference. I don't know which one you're referring to, Mr. Lopez Garcia, but there might be a bit of a difference. But I would again advise you to chat with your bank or with a mortgage advisor or with both, to double check what you can actually borrow, because maybe that 10, 20, 30K difference can make a difference. Awesome. I am going to wish you a wonderful Thursday. Have a lovely day and a weekend ahead as well. If you, I think I need to do this. So if you want to join on a call with us, free of charge, no strings attached, so completely free, just pop in that link, and you'll be able to schedule a session with most likely my colleague Katie. She lives in Rotterdam, she breathes Rotterdam, and she owns Rotterdam. So she'll be able to support you with buying a home in Rotterdam. Take care, guys. Have a lovely, lovely day and weekend ahead, and we will be in touch. Ciao, ciao.